And, markets move quickly on new information, more so than I've ever seen in my career. You look at the futures in the morning and the market opens and there it is, right off the bat. So these short-term swings don't define long-term outcomes. And we have to realize that we're playing the long game.
And welcome into Protect and Grow Chicagoland Retirement with Chicagoland's certified financial planning professional, Tim Stearns, CFP, founder at TJ Stearns, Inc., Chicagoland's resource for a common sense approach to planning for your financial investment and retirement future. We always appreciate the time that you give us here on the program, Tim, the insight, the guidance, the information. Thank you for being here. And we certainly have a lot of news in the headlines right now about the world on fire and the market volatility that we're seeing.
Well, Peter, and that's why it comes to my attention here. We need to have a idea of the day, my thought of the day, and that is this: market volatility is not the same as a market correction. And the last 5, 6 weeks we've seen market volatility, which is due to the Iran war. That's a lot different than a market correction. A market correction is a lot more permanent. It leaves a mark, as they say, and you're going to feel it for a while. Market volatility, on the other hand, is something that does happen in the market. It's going to happen in normal. The normal day of the we see this all the time.
So if an investor is turning on the news and feeling uneasy, Tim, which I think it would be easy to be right now, is this an indicator of anything larger?
I mean, I don't think it is just yet. It could be, but I don't think it is. I mean, you need to stay to the protect and grow plan. Which is why we have a tried and true process. Is it perfect? No. But is it going to do better than just, hoping for the best like most people do in the market? Yeah, I'll put my 32 years to the test here. But I think at the end of the day, this is normal business. I mean, I think people forget because we've been lackadaisical. We've had 17 years of really good markets and you rest on your laurels.
Yeah, nothing new, nothing unusual about market volatility, part of the investment experience. And headlines create emotion. Certainly, we have more than our fair share of headlines right now, but current events with Iran and oil prices and global uncertainty has all the potential to create dramatic news headlines, Tim, maybe even deciding day-to-day market direction. But this is not a true economic downturn or a larger market meltdown of any type.
Yeah, Peter, I mean, geopolitical risk often shows up in the energy markets first, which we saw. If you've pumped gas lately, oil impacts inflation and consumer spending. We just saw the numbers come in the other day, at 3.3%. And then the markets, of course, react even quicker than that to the uncertainty. And with that comes people panicking. But, we talked about this, 2 weeks ago, where we said, not having a plan leads to this panic. And here we are.
Yeah, but Tim, I mean, for the average investor, I think it is easy to get a little unsettled right now. I mean, you mentioned the global uncertainty. Markets don't like uncertainty right now. Several moving parts, the geopolitical, the interest rate uncertainty, slowing economic growth. When we have multiple uncertainties like this, is that something that raises alarms for you or for investors?
Well, to your point, I mean, what I see is volatility is simply a reaction to this. It's not a conclusion. And, markets move quickly on new information, more so than I've ever seen in my career. You look at the futures in the morning and the market opens and there it is, right off the bat. So these short-term swings don't define long-term outcomes. And we have to realize that we're playing the long game.
Yeah. And I'm going to just repeat back what you started with. Essentially, volatility is not the same as a long-term decline, right? Maybe investor fear and our reaction is the bigger risk than the market volatility itself, Tim.
And what fear does is it can lead to decisions like selling investments after declines, moving to cash at the wrong time, abandoning a long-term strategy, and trying to wait until things get better. Unfortunately, those decisions often lock in losses and miss the recovery that follows.
Tim, can you put today's market into perspective for us?
Sure. I mean, markets are still near historically high levels. If you want to put it even into smaller print there, we're still playing with house money. People have had a good ride here. So even with recent volatility, we're still coming off some of we're not from a position of weakness here.
Yep.
And that doesn't mean markets can't decline. They can and they will at times. And we just have to be reminded that, they're still elevated. Volatility often occurs near highs, which we've seen, and that we have to keep our perspective, and that matters.
I feel like every generation, heck, every decade, every year, it feels like, Tim, goes through some moment of uncertainty like this where we are seeing a little bit of heightened volatility and it scares people, investors, into reacting and potentially making mistakes that will not not have the progress that they would have had for years to come.
Right. I mean, you've seen the Great Recession, 2008 through 2009, the COVID market, which was March of 2020, the inflation surge and rate hikes of 2022. There's been trade tensions, geopolitical conflicts, and countless global crises. Each time the markets experienced volatility, and each time investors felt uncertainty. And the weak money runs to the hills and goes to cash or panics. So volatility is not new. Markets have recovered from every major downturn historically.
Yeah.
And
And,
that's long.
and not only recovered, Tim, surpassed previous highs.
Right, right. And you just have to be able to make sure that you have a plan in place. Now, if we get a redo like we did after 2022, then you have to realize that that is the time you take pause and realize that you need to have a strategy in place.
And volatility, Tim, if we are invested, is actually part of that strategy.
Of course, you have a growth bucket, and then that's the, protect and grow. That's the part of the growth bucket. The protect is the other part, which is where you're getting your income from. And that's what we do with our clients. We don't have people calling us panicking. There's some people that are worried, but they're not panicking. And that's a difference.
So, Tim, if we are concerned, more than just, hey, paying attention and aware, but actually concerned for our money, our finances, our investments right now, it may be an indicator of something bigger, that our plan is not properly designed and aligned.
Yes. And how long have we been saying that? We've been saying that people are taking undue risk, and we have so many people coming in here, and with way too much stock. And so I ask again, is your portfolio aligned with your risk tolerance? Do you have enough liquidity for short-term needs? Is your income plan secure? And then right now, maybe are there some tax opportunities like Roth conversions if your portfolio has been beat up a little bit? And should you be rebalancing?
Yeah, volatility, not a signal to panic, a signal to plan if you are concerned. And Tim, for those that are there are sound defensive strategies available to prepare for uncertainty. And when we say that, even uncertainty of a much greater extent than what we're seeing right now.
Right. And that's why you want to make sure you're planning because that beats reacting. Volatility creates some strategic opportunities. So you want to use some uncertainty to improve your plan. And this is the time you kind of recoil and figure out what's what and what's important.
How can we best be positioned for volatility defensively, Tim? If we are concerned about what we're seeing right now, if we would like to have a more conservative stance with our investments, what are the steps or the subjects that we should be approaching?
Well, I would look at diversification, having a balanced asset allocation, liquidity for your near-term spending, so you don't have to sell in a down market, which would come with also having income stability, and then basically having a clear long-term strategy so that you if this happens again, you're prepared for it.
Long-term thinking is the investor's advantage.
Every time. And I don't know why people don't learn from this. I know I'm older than you are, Peter, but we've learned from that and by being in the business But I mean, people that are in their, the baby boomers, I would hope they've learned their lesson from not being prepared.
Right. Time in the market, not timing the market. The big takeaway, ladies and gentlemen, for long-term success with investments, you have to look for the long-term time perspective. Short-term is noise, long-term is success. And Tim, that protect and grow plan that you put together for your clients there at TJ Stearns Inc., that has a long-term vision with diversified strategies to reflect your individual clients' goals.
Well, with us, the time horizon matters more than the headlines of the day. Long-term thinking reduces stress. Discipline drives results, and that's what we're here for.
The goal is not to predict every market movement, ladies and gentlemen. There will be strong market movements along the way, both directions, up and down. The strong strategy is what allows you to navigate through them. So if you would like to get your Protect and Grow written retirement blueprint put together, specifically the plan that shows you how to generate more income from your assets and your investments while controlling and paying less in taxes, pick up the phone and give a call to Tim Stearns, CFP, and TJ Stearns Inc. 800-640-2256. That is 800-640-2256. 800-640-2256. Tim, it's okay to stay informed, but don't overreact.
Exactly. And by having a plan, you won't be overreacting. The Protect and Grow plan will take care of the rest.
Trust the process, focus on the long term, ladies and gentlemen. That is what a plan should help you to accomplish. More emotional confidence when the market does not seem to have as much. And we will see volatility. The market will move up, down, sideways for the foreseeable future forever, but you should be making progress along the way. That is the basis of planning, and your Protect and Grow plan, the blueprint for that, ladies and gentlemen. So pick up the phone, give a call, 800-640-2256, 800-640-2256, or online, tjstearns.com, tjstearns.com. Tim, always a pleasure having you here on Protect and Grow Chicagoland Retirement.
Thanks, Peter.
Tune into Chicagoland certified financial planner Tim Stearns' full radio program and visit tjstearns.com for many valuable resources, including other great episodes of Chicagoland Retirement. Be sure to subscribe.
Investment advisory services offered through Cornerstone Securities, LLC. The information presented on this program is provided for informational purposes only without warranty of accuracy, completeness, or suitability for particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature, not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs.